Guys, what's going on in this video? 5 reasons why NVDA shares will drop after it announces earnings after hours. Now, there's a couple of scenarios here. Miss and squeeze type setup gives us a 77% probability. As you know, NVIDIA had quite a move from 160 all the way to current level about 209, 210 bucks. We're expecting after hours the shares to do exactly this, 77% outcome in this particular case. And then institutions will buy the dip, followed by a bounce, either immediate bounce or a bounce at some point tomorrow. Now, with that said, we are going to describe the magnitude by which we expect this drop to actually happen by the end of this video. 23%, there is short to bounce type probability where initially the stock will bounce, followed by profit taking throughout the day tomorrow. Now, here's what we're seeing. There's actually more than 5 reasons here, guys. So first, let's take a look at the daily chart. Daily chart, number one, we got a small RSI divergence. The stock keeps trending here, sort of consolidated, okay? There are a couple of ways to look at this. One way to look at it is that it's consolidating before a breakout higher. The second way to look at this is actually a multi-top formation. Now, what actually makes the difference between consolidation and a multi-top formation, we're going to review in just a second here. For now, just focus on these 3 red dots, which simultaneously portray a topping formation here. In a sense, the way these candles are formed, especially this last one, which is a black bearish reversal candle right here. All of these moves here are happening at substantially lower volume. So at this level, institutions, they really don't know what's going to be taking place next. And clearly, we do have a confirmation here on the volume. As you clearly see, before at these 170s, 160s level, they were buying it on much stronger volume. The buying volume represented by the gray bars. Now, at this level, not as many institutions are committed to buying the shares, which is not something you want to see when the stock actually is going into earnings. You want to see a spike in volume. You want to see the investors' confidence in the fact that they will be buying the stock no matter what. Because of this indifference at these levels between 205 and 210, basically, there's not too many takers at these price levels that think this stock is going to move substantially higher, represented by this indifference in volume right here. That tells us that there's plenty of people that can sell the stock. Now, the dev cross right here on the MACD on the daily chart actually shows us that there is a high probability of a near-term drop. Now, we combine this with accumulation distribution, guys. As you can see, we have a divergence on the accumulation distribution, which we also see in the next chart I'm about to present to you as well. But what we've got a situation, while the stock has appreciated from 170 to this level of 209, 210 level, look at what happened to the accumulation distribution. Actually, what we're seeing at this level, accumulation was at peak over the last couple of months. So since then, there's been a lot of people continuously actually sold the stock, followed by just a slight interest recently. But this peak right here, going into earnings, is substantially lower than this. So if you connect this dot with this dot, this actually is not something you want to see when the stock is heading into earnings. Basically, we have a downward situation in the accumulation in relation to how substantially higher the price have moved in the stock. When we take a look at the weekly chart, things get actually a lot more interesting here. Man, Leonardo, are you getting ready for Christmas? Look at all this Christmas tree stuff you got going on here. So here's the deal, guys. Historically, this level, I remember trading NVIDIA when it was 50, 60 bucks, but historically, this level right here, guys, is a tough level for the stock, okay? And a lot of times, as you can see right here, it was used as a support level. Well, now this is a crucial resistance level. Now, this is where a lot of selling has been happening, while a lot of stocks like Apple have similar chart. Clearly, Apple has recovered and it's already at all-time highs. But in this particular case, investors really have doubts about this particular name right here. There's a lot of stuff that could go wrong with this earnings report. So with that said, we're seeing in this chart this huge resistance level where the stock may have a very difficult time actually breaking out higher. Now, don't get me wrong. In certain instances after stocks report earnings, they can slightly overshoot to the upside and reverse quickly. Guys, if you can count to 5, this is how easy this trade actually gets. So right here, recently when the stock hit a low in the beginning of the year, right, when pretty much everything was selling off and then hit the bottom in the 130s, we did inform our daily analysis subscribers to actually buy calls on this thing. Now, since that time, the stock has moved up substantially higher. We were taking profits all along the way. But the importance of number 5 here is this. The first move higher was here. Then it followed by a move lower. That's move 2, move 3, move 4, move 5. After these 5 moves, look what the stock does. It got a substantial correction from 180 all the way to the 140 level. We got a same repetitive pattern right here. 1, 2, 3, 4, 5. So the probability of something similar to this is actually likely. We just don't see it maybe happening to as great of a magnitude of $40 move. We're seeing maybe a possibility of a $10, $20 drop here after the earnings report. So now this situation right here was about to get out of control, but the stock is actually trying to save itself from a death cross. The blue line was getting terribly close to this orange line. It was heading into the death cross formation. Now, a lot of stocks, after they get so close to a death cross formation, they are not able to escape that. And a prime example, recently it looked like Amazon was about to escape the death cross just to get back into the deadly situation again. Amazon has been a short. We've posted in our daily analysis video maybe about 5 days ago. Since then, Amazon is down 50 bucks. The options being so cheap, guys, it's a nice and easy trade. And that's the same thing that we're noticing here. Options are incredibly cheap. So this is a divergence in light blue right here. As you can see, while the stock has moved from 140s all the way to 209, 210 level, look what's been happening to volume. It's been moving higher on consistently diminishing volume, which is a divergence, guys. So basically, less and less people were interested in buying it the higher the stock went. Now, what we've got here is also a situation on accumulation distribution. We witnessed it on the daily chart. This is also confirmed right here, guys, on the weekly chart. Basically, while the stock keeps moving higher, the price action tells you, oh yeah, man, they're buying the hell out of it. But that's not what's actually going on, because here, accumulation distribution has been plateauing. It's not going anywhere, okay, which basically shows you a characteristic of a behavior where really no big institutions are accumulating the stock. What they're doing is they're just trading it on day-to-day basis on diminishing volume, okay, which creates an opportunity for them to sell. This is a death trap for bulls. It's a setup that's designed, even if the report is good, when the stock bounces, they will come in and sell it viciously. And if that's going to play out as a 23% probability that we describe in this video, and then expect a black candle to be formed tomorrow. Now, with that said, guys, okay, currently the stock trades at 3:10 p.m. on Thursday, November 14th, as I'm trying to record this. It's at 209.36. The first target price we got on this is 198, and the second target is 191. Now, easy pair correlation trade, in other words, instead of actually trading NVDA, which the options are super cheap in relation to historical valuations of options in NVIDIA, but a better trade could be a pair correlation type trade on AVGO. The options here are insanely cheap. So you can simply come in, buy AVGO, 310, okay, 307 and a half puts. Okay, and if the NVIDIA drops, this got a nice setup. Also, this top information, triple top right here, tiny miniature head and shoulder formation, guys. If NVIDIA flops, this stock is good for at least a $5, $10 drop as well. But the options are substantially lower price, so this could be a highly lucrative trade right here. It's fixing to head into a death cross formation on MACD, and just a lot of things on AVGO. It's looking highly bearish, guys. Put options are notably cheap compared to historic levels. All you want to do is stair step. So in other words, buy some ahead. We never recommend buying a ton of options, but considering the market is all-time high, this chart's pointing to a highly exhausted stock here, diminished interest from institutional investors. Look, a surprise can happen, but you cannot go wrong just picking up a few contracts ahead of these earnings report and add in some more in case the stock does bounce first. We've been doing it on many entries lately, and they do work, guys. Even though initially you may get the direction right, some of these stocks have had some substantial drops, so don't miss on this one. Let's roll. Just remember, not every market environment is in favor of actually trading earnings ahead of the earnings announcement. But these market conditions are not your typical market conditions, so it actually does make sense to take some risk, because for many years we have been against trading and buying options ahead of earnings. Now I see it got a couple of people confused that have been following us for some time. Okay, clearly, typically you would have a huge option appreciation in valuation, so you're really buying the options for too much money. We break this type of situations very thoroughly on our courses, so you would know we would not typically be an advocate to buy any options ahead of earnings, but considering how crazily these put options are priced based on a historic comparisons, guys, you do want to buy some ahead. With that said, guys, if you're trying to learn more about how to trade options, how to trade earnings, how to find pair correlations to certain trades out there, how to take advantage over this crazy market, okay, click the link below. Watch some of our live trading videos so you can first understand what can be done with trading weekly options, and second, okay, take advantage of our charts divergences courses that can help you evaluate the charts so that you would have full confidence before you take your next trade. Make it happen. I'll catch you guys on the next trade soon.